How do you buy a house? Mortgages are like a foreign language to most of us, but I've got an expert with us, Szoka, Union Home Mortgage, and he's got some great ideas on how to make a plan so you can get a mortgage and more. Hey, Mick, great to have you back with us.
Good morning. I'm glad to be here and continue our episodes of building the mortgage plan.
Yeah, because again, you're kind of in a foreign language field, if you will, for a lot of people who, what do you do? How do you get a mortgage? How do you buy a house? And you were talking about a plan last month. Mm-hmm. Like there are steps you can take to get that done.
Yeah, absolutely. So there's four major components to a mortgage, and looking at those four major components it can help you prepare in applying for a mortgage and successfully obtaining a mortgage and relieving some of the stress. Yes. So the four major.
We can all count to four.
Oh yeah. So the four major components are income, assets, the collateral, and then also credit. And so today we'll talk about credit and how credit affects your ability to borrow, and maybe reveal a couple things that are surprising to people.
Okay, so credit is, I know with the car dealers sometimes they go, don't worry if your credit is awful, we'll sell you a car anyway, kind of a thing. So how do we get credit?
So, we look at credit reports, obviously, and, we can't predict the future. Nobody can predict the future. But what a credit report does is give you an indication of how a customer has performed in the past on credit. A credit report really is just a report card of how people have handled situations where they've borrowed money before. Credit cards, car loans, maybe potential other home loans, student loans. The things that don't appear on credit reports are such as utilities. Rent normally doesn't appear on a credit report. Okay. Those types of things. Now, they could end up being on a credit report if someone had a default or a collection or something along that line. And they didn't pay
the negative is going to be on there, maybe not the positive.
Not the positive.
Okay. So, which they always say, it's not actually good to pay cash for everything in some way because you need to have a record of credit, which shows your reliability and meeting your responsibilities to pay, right?
Absolutely. So that shows what your responsibility level is. And hey, listen, everybody has issues, some issues in life. Life happens, right? And so people can have issues in the past in their credit, bankruptcy, foreclosures, late pays, those types of things. That doesn't eliminate them from
the dog ate your bill.
Yeah,
I don't know.
Whatever. Things do happen. Yeah. So they're because I run across customers say, well, I had a bankruptcy 7 years ago. Well, that's okay. Have you reestablished credit? Have you reestablished borrowing credit? Sometimes people that have bankruptcies in the past have reestablished credit, have great credit scores.
Sure, because I've heard that a bankruptcy after so many years, like 4 years, something like that, then it fades into the background again if you've got something positive in its place, I guess. Right?
And there's actually even some shorter periods depending upon if you qualify what is called extenuating circumstances.
Okay.
Which I'm not going to go in that deep into the weeds today because it gets pretty deep, but it's worth customers looking into because again, life happens. What's interesting is when I started in the business in '92, there were no credit scores. Well, you get credit reports. Yeah, there's no credit scores. You get credit reports, underwriters and originators. We'd look at every trade line, see if there was late pays, so forth. And then the underwriter would interpret that credit history. So when credit scores came out in the mid-'90s, mid to late '90s, it really started to standardize how credit was looked at. And many people think, due to a lot of advertisements and so forth, that if they're not in the 700s, they don't have a good credit score. Well, you don't have to be in the 700s to obtain a mortgage. We have programs that go down to 600.
Really?
As far as a credit score. Yeah, so there's a lot of different things that can be looked at in regards to credit history. And
so don't be discouraged, let's say, if you've had some things maybe in your past and that kind of thing. Now, I know every time you apply for a credit card, it shows up on your credit report, right?
Yeah, so inquiries do come up inquiries within the last 90 days. Now, if someone is continually applying for credit, that does hurt a credit score. But, occasional inquiry is not an issue to the credit.
Oh, good, because I know that sometimes it's like, oh, we better not, get a Target card because it might affect our credit score or something.
Yeah, and again, depending upon what your credit history is, it probably wouldn't even have an impact in limiting the ability to borrow. The other thing that got changed a few years ago, which was very nice, is the fact that if you have inquiries from the same industry within a short period of time, let's say you go buy a car, You get a credit pulled by one dealership, go get a credit pulled 2 days by another dealership, 3 days later by another dealership.
Right.
It's only considered one pull.
Oh, good, because it could potentially be negative if you're applying for so much
Exactly.
credit all
And
at
in the
once.
past it used to.
Oh, okay.
But it became realized that
Common sense. That's common sense.
Yeah,
right.
that people are shopping for a car somewhere. They're looking at one purchase, not three, and looking at different dealerships and different deals. Same thing with the mortgage industry.
Yeah, oh, that is great. Is it important for someone to get a copy of their credit score, their credit reports every now and then, just to look at it?
I think for everyone, you know, an annual review. Again, we're not a credit repair or credit advisor, but common sense says you should look at it at least on a yearly basis. There are other services out there that you can look at it all the time. So forth. But
So
yeah.
I think there was a scam recently. It says, "Oh, you got something bad on your credit report. Look into it," or something like that. So you go, "Oh no," because it's very important to keep your credit score clean.
Right. And in the mortgage industry, we use the mortgage credit report is a combination of all three repositories. So we get 3 scores from TransUnion, Experian, and Equifax, and we use the mid score.
And they're different. How do they get a different score?
Well, because they use different models.
Oh,
Each one has their own proprietary model in which they determine the score. And so that's why we pull all 3 and take a middle score, as is the fairest way of
That
looking
is
at a
fair.
score. Yeah.
Get a good average on that kind of thing. Is there like one thing that would forget it? You're not going to be able to get a mortgage.
If you've had a recent bankruptcy or a recent foreclosure that's something under 2 years, yeah, you're going to have a waiting period for that. Sometimes over 2 years, again, as I mentioned, extenuating circumstances can come into play. But yeah, if it's been within the 2 years, yeah, you need to wait.
And what should you be careful about in terms of building your credit score well? Anything?
Well, the thing that they look in credit reports is how do you pay your payments? Are
So
they
just
timely?
make your payments. Don't
On
lose your
time.
bills, and do them on time.
On time.
Yay.
Yeah, whether it's the minimum payment or more, whatever it is,
Just pay it.
pay it on time.
Sometimes there's a little grace period, but don't rely on that, huh?
Exactly.
Mick Szoka, United Home Mortgage. Thank you so much for our Union. I'm sorry, Union
That's okay.
Home Mortgage. We'll get that Union Home Mortgage. Let's get together on home mortgages, right?
Yeah, absolutely.
Unite. Thank you so much, Mick
Well,
Szoka.
thank you again
Great
for having
information.
me. Yep,
I'm gonna
and
go
I
check
look
my
forward
credit
to
score.
next month.
Yes.
We're going to talk about income.
All right, income, very important. All right, don't go away.